Alrighty, folks. As you know, I was lucky enough to be on Meet Kevin's channel 2 or 3 weeks ago. During off recording, we talked about his call at 1.8% 30-year money. I actually saw a video of him talking about it, so I think it's fair now to take a private conversation public. And I want to ask my two boys that we call the three amigos, Dion and Matt, what do they think about it? But before we do that, let's welcome them to the show. Dion, how you doing?
Howdy, I'm doing great. I'm excited to be here. I'm not only retired and getting a lot of sleep, but don't have that newborn at home, so I can still sleep.
But you remember the days. You remember. You did it three
You,
times. Yes.
I remember going to having to go to the store to pick up, in the buggy to go pick up something. He remembers.
Absolutely. Oh yeah, absolutely. Matt, how you doing, man? Your new one's what, 10 days old, something like that?
Something like that. Yeah, like 10. Yeah, right around. Tomorrow she's 2 weeks. Yep. So
Tomorrow's
often
2 weeks.
imitated, never duplicated, underfed and underslept, but we're making it do.
There you go. Well, guys, Meet Kevin shared with me privately during our kind of when the cameras were off that he thought that there's a better than 50-50 chance that in the next decade, so it's quite a long window, so the next decade, that mortgage rates are going to see sub 2%, and he actually called 1.8%. Subsequent to that private conversation, I have seen him talk about it in a couple of YouTube videos, so I feel it's fair to share now with the public. So Matt, we'll go to you first. What do you think? From 0 to 100% chance that we see a 30-year mortgage rate, say owner occ, say best credit, say 20% down, right? The creme de la creme, below 2% in the next decade. Let's just say below 2% in the next decade. What do you think?
1.8% chance.
Look at you getting creative. 1.8%. So not zero. You're saying there's
not
a chance.
Not zero. Yeah. I mean, I think that, if you have, global supply chain breakdown, you have war, you have, some other economies collapsing. We still continue down this horrible debt path. It's the confluence of all those events. Middle East war breaks out, past the borders, now we're talking, okay, now we've got everybody's attention on other stuff. And it is, steel pennies and that sort of thing, right? So it just depends on how big that is. Like, we're kind of due for another world war per all the World War people, we're kind of due for another one. And with the number of conflicts going the way that they are, generally speaking, in the same, couple continents, there's a chance. And so if all of that stuff happens, not zero. It's not zero. Nothing is ever zero.
Okay. All right. Well, Dion, what do you think? What are the chances sub 2%, 30-year money sometime in the next decade?
So we had a global pandemic that stopped the economy in its tracks. And home buying mortgages went to what, 2.6?
Yeah.
Was the kind of the best I think I remember seeing. I saw some investors, I refinanced some investing loans to 3, right? So it was close. So, right, could something happen that can make it happen? Yes, but here's the concern. It's a 1.8, I think, is being generous % chance that it happens, right? So I'm on the small side with Matt. But the concern is you have the new investor that's out there that watches Meet Kevin, sees his success, and says, hey, it's probably not going to go that low, but I could see it going really low if Kevin's calling for it to go that low. So I'm going to get this mortgage at 8%, and in 2 years, I'll have some little negative cash flow for a couple of years, and in then 2 years, I'm going to refinance to a 4, a 5, and then I'll start making money. And that person is going to lose the asset.
You're right. So again, to kind of go through step one, I think we're all, it's not a zero, but I actually like Dion. I think Matt's being generous at 1.8%. It's a cute call. I think it's sub 1% chance. Cause again, we have to remember how the mortgage historically is done, right? It's usually 180 basis points above the Fed funds rate. And, oh, by the way, the reason we got sub 3 is not only we had zero Fed funds, we also had quantitative easing. We had the largest buying of mortgage-backed securities ever. Correct. And they did it for 18 or 24 months. So both of those things would have to happen, and we would have to have a collapse in margin rate. So again, not a zero, but not something I would be even putting $1 on. It's pretty wild.
That's the other thing that was missing there is it has that collapse in margin rate, right? Lenders lend on margin, and most people forget that
Yeah.
There's the Fed rate, and then the banks will lend above that, and that's where they make their money.
Correct.
Yeah.
So for it to be at 1.8, we'd have to be at 0, and they'd have to compress to, and it's usually around just under 3 points is what they're trying to have that spread be.
Right
It
now.
could be a little more, it could be a little less, depending on fear. So an event would have to happen that caused the Fed to go that low, and then lending fear would have to drop as well at the same time as that bad event.
Yeah.
Yeah.
Or if Fed goes negative, which again, they haven't historically, they've gone to 0
Right.
several times. That could be another thing. But again, it's interesting. So I wasn't planning to go here, but Dion brought it up, right? Meet Kevin's 1.8 million followers. He's got a large following. Certainly it skews younger, I'm sure, if you looked at his YouTube stats.
Sure.
There could be a lot of folks that hear that and go, great, I'm going to go get a 5-year arm. I'm going to go get a 7-year arm.
Mhm.
And I hadn't thought about that, but you're right. And again, if you're doing an arm and you have negative cash flow, come on. Have you not read the book, No Alligators? It's the only picture in the book. But I would do 30-year money all day long, right, Matt?
Yeah, 30-year fixed rate debt. And the, in the, during the pandemic, it was, you could find banks at 1.5 of margin.
Yep.
1.25. Some rare exceptions, but it's 1.25, 1.5. A number of them were at 1.75. And now they're 2.5, 2.75. I talked to 6 lenders last week. I had a bank back out of a deal last week. I was like, I'm sorry, what? You have the wrong number.
Yeah.
You don't back out of my deals.
You don't know who I am.
Yeah. You don't back out of my deals. We have an agreement. They're like, yeah, we're not going to move forward. It's like, okay, just so you know, your name's on the list now. It's not easy to get off that list.
Yeah. Very cool. Dion, you brought this up again. Meet Kevin is very influential. He's obviously doing his house hack thing. I guess he's talked about a deal he's working on right now. I don't know. I honestly don't think that was his message to his following, because I never heard him kind of lean that way.
No.
But you're right. Somebody could hear that, oh, rates going lower. That means an arm is okay. Arm is safe. Again, arms aren't safe for most people. What do you think?
So I'll take it one step further, but I'll start with a caveat of I like Meet Kevin, right? I his 203K loan starting at Jamba Juice to get on the property ladder, like that story that goes out in his videos on how to fix your credit. He really became popular when 2020 happened, and he started doing stimulus updates 5 times a day. So he grew millions. I mean, he's smart at growing a business. So I'm hoping that the step I take it to doesn't happen. And I don't want to live on hope. Hopium will get you. The person watching his content might go, okay, he's calling for 1.8. Maybe it'll drop to 5. So I could do fixed rate debt and then refinance. So they'll buy an alligator, right? So I think you're right. It should be 30-year fixed rate debt, but cash flow day one. You shouldn't be buying that you're planning on doing. Okay. Even Warren Buffett says, if I knew what interest rates were in 2 years, I'd still invest exactly the same. Right? Your investing strategy doesn't say.
Yeah.
But here's the step further. When I did the caveat of I like Meet Kevin, so this is not an attack on him. This is a concern.
Oh no,
he's doing house hack.
Yeah,
it basically, and I haven't done the research on it, know the structure, but it sounds like a syndication style where he takes money together, $300 million or so, and invests in with his knowledge and strategies. And the 23 hours a day that he works, right? There's somehow he magically does actually do something close to that.
He does work a lot.
Crazy, right?
Mm-hmm.
Is he going to be investing thinking that his call is accurate and he can make investments with house hack based on within 10 years, we'll have 1.8% interest rates to fix any problems that pop up between now and then? I'm not saying that's happening. He hasn't said that. My concern would be like the syndicators from 2 years ago. Rents just went up 10%. Look at our deal. It's going to go up 10% next year and the year after that. And then you're going to make all this money. And then we see flatlining rents and you see syndications folding and all the LP money gone. The lenders taking a haircut and the GPs kind of walking away with a couple $1 million going, yeah, that sucked.
Yeah, that hurt. Yeah. So I don't know. I don't know the deal structure. I don't know the debt structure. He could be paying cash for all I know, in refi later. Don't know. But that would be a concern. But let's flip the coin over now. Let's just assume 1.8 or sub 2 happens. Let's just play the game. What do you think happens to hard assets if we go back and revisit 2%?
Oh my word. I have to redo my PFS and all the numbers. I'm adding zeros and commas. It's fantastic.
Yeah,
Anybody
PFS is personal financial statement for anybody who doesn't know.
Yeah. I mean, literally, and that's something that when you start to, increase in size and kind of get over that 10 mortgages thing, most banks will make you fill out a personal financial statement, which is basically, hey, here's all the assets I own. Here's all the debt that I have. Here's all the savings that I have. Here's all of my assets. But if debt, because we all know, everything's based on payment. If debt goes to 1.8, game on.
Come on. Yeah.
I mean, now you're talking about $800,000 starter homes.
Yeah, that's what I was thinking, right? If you call the starter home today 400,
440, yeah.
Yeah, 440, whatever it is. If you've got it, I mean, it's certainly if we're sub 2% for any length of time,
yeah,
you're talking 650, 700.
Well,
for the first time. Jeez.
You still haven't fixed the problem.
Yeah, supply.
The government is still the problem. They're like, no, you don't understand. We have this really cool program. It's going to add a ton of demand to the system. You mean the one that doesn't need any more demand? Yeah, that's the one. We got 2 or 3 programs that we're working on. We're going to add a bunch more demand.
Yeah, we're going to help get you on the property ladder. More demand. More demand for assets we don't have.
I don't know if you guys looked at your market, but all the small multifamilies in my market are under contract, except for the 2 that are like ridiculously overpriced.
Yeah, I did actually because of that Fannie Freddie thing. There's it's funny because I had looked about a month ago and there was a fair number of them. We're talking a dozen, maybe 15.
Yep.
There's 3 now.
Exactly. Same thing happened in my market.
Whoops.
Yep. We went from 9 to 2. And the 2 that are priced at what they're priced at, I'd like to be on what that guy's on. That's expensive. Like those, if they sold at that would break every record in the book, even if it were at a 5% rate, but it's at an 8% rate. So the numbers don't math.
And it'll probably sell because not everybody's an investor who educates themselves. Sure. A lot of people have heard the term house hack, watched one 10-minute video and thought, 5% down, I can afford that. I'm going to buy an investment property where I can afford the payment, like they're buying a house.
Yeah, exactly.
And the last thing to wrap up with here is if this is the premise, in 5 years, we have the crystal ball, we know it's 1.8%. A brand new investor is probably going to think halfway through. They're going to think, if I wait 4.5 years, as rates start to come down and I buy before prices go up, I might have that sweet spot to buy a property. The actual investor who will think it through the second step will think, if I buy, and if I knew 100% guarantee, we've seen the time machine, it's 1.8% interest in 5 years. If I buy every single property now that I can possibly get my hands on, and then like Matt said, in 5 years, when those interest rates happen, I add commas and zeros, move the decimal point on net worth. So again, predictions are always scary because you can make decisions that can blow up in your face, where I like the 1 rental at a time strategy. Buy cash flow, day one, no alligators, learn your market, get a great deal that beats the average, consistently do that. Yeah. And yes, use knowledge to know if we had a whole bunch of adjustable rate loans, again, above 50%, and people had 105% levered and it was ninja loans, I'd be expecting a crash. I'd be investing like I thought a crash was coming. So we can use some predictors to say, I'm going to have confidence or lack of confidence in my investing. But knowing what interest rates are like that, or thinking that we know what interest rates are, is dangerous.
Oh yeah. Because and then the final thing to talk about, not only would our net worth, I mean, it would go up 30% conservatively, but the other thing is the income statement would fall, because I don't know about you, I got a bunch of debt at 4.5. I'd refi it too. And I probably wouldn't even take cash out. I'd just do a rate and term refi. My payments would collapse 20%. My income statement looks even better. So pretty wild. I don't know. I actually hope we don't see sub 2%. Let me just close with that.
If that happens, something really bad happened.
I hope we don't see sub 5% in the next year.
Yeah, me too.
Because prices will just go so stupid. I think if we go, and this is a weird thing to say, if we go sub 5%, I think prices will go so stupid, I might be tempted to sell.
I agree. Yeah, I would agree with that. Yeah. All right, guys, let's wrap this up. We got 2 more exciting topics. We'll go reverse. Dion, where can people find you?
Thanks for having me here, Mike. I always appreciate it. You can find me right here on YouTube, Dion Talk Financial Freedom.
And Matt?
Lumberjack Landlord, 11:30 a.m. Eastern time on Sundays live stream, and I couldn't think of any other better place to be on 11 a.m. on a Tuesday.
I love you guys. Thanks, buddy.